Thermodics are hiring day shift production operators. These roles are based in their facility in Ballinasloe, County Galway, and the working week is a 4-day compressed week from Monday to Thursday. They invite you to visit their website to apply, www.thermodics.com/careers, or email hrireland@thermodics.com with your CV.
If you need any phone numbers or email addresses, please call our reception on 091 770077. Search hashtag Galway Jobs on social media or go to galwaybayfm.ie/jobspot.
You're listening to Galway Bay FM and this is Galway Talks with John Morey. Don't forget our cash splash. We've given away €15,000, but will you be our next big winner? We'll give away €5,000 cash to one lucky listener on Friday. Dive in and get all the details on galwaybayfm.ie. Purchase your €10 ticket and get 6 tickets for €50. €5,000 waiting to be won this coming Friday, the 5th of June, for one lucky Galway Bay FM listener. Will it be you though? €5,000 could be yours. Get your ticket now from galwaybayfm.ie. It's time now for financial advice, and we're joined in studio by Dave McCarthy of McCarthy Associates in Woodkey. Dave, our first question in today. I am 64 years old and my life policy is expiring in September. Can I get new cover?
Well, you can, but it'll cost you. You'll pay through the nose for it. I suppose you have to take the view that once you reach a certain stage of life, and particularly when you're at that age, as 64, into your 60s or even maybe late 50s, that life cover, getting new life cover, it shouldn't really be a priority in the sense that it's going to cost you so much, and that's based obviously on your age and if you have any health issues. So all I would just say is let it off. It's going to expire in September anyway, and getting new cover, it's just not economical.
Another question. My husband and I built a house with no mortgage on a site gifted to us by my father. The site is still in his name after 10 years. Could we have a problem in the future?
Well, you have a problem now. And the problem is that you actually don't own your own house, because you can't own a house and not own the site or the land underneath it. So what's happened here is that they built a house, they don't have a mortgage, which would have triggered the transfer of the site, because you wouldn't have got a mortgage if you didn't own the site as well. But that didn't happen. Maybe the background here is that you were trying to save on fees or something, I don't know, but you have a real problem at the moment. For so many reasons that I can't really even go into, because there are multiple ones. If anything happens to either one of you, if your family, anything happens to your father, for argument's sake, that site becomes part of his estate. And the fact that you own a house that's built on it, is a bit irrelevant. So you need to get yourself into a solicitor urgently and ask them and how to address it, and sit down, both of you, with your father, and get this sorted. And dare I say it, while he's still around, God forbid something happens to him.
Another question. I have a pension fund in the UK. Will I have to pay tax on it when I retire?
It depends on your tax rate over here, but the simple answer is any income you receive from abroad or here is taxable. Whether you end up paying tax on it or not, as I said, depends on the level of income you have. But the answer is yes. You will also probably pay a retention tax in the UK, where they'll make a deduction off the payments when you are receiving your pension, but that can be offset against your liability here.
Now on to another topic. The lengths to which banks are going to dissuade customers from moving their monies elsewhere. How far are they going, Dave?
This is a very serious issue, and it's one that's been getting more serious over the last year or two. Okay, the background to this, first of all, we all know that banks are doing their best to ensure we're not scammed, and we get notifications and we get a lot of information from them in relation to how to spot a scam. That's the first thing. Nothing wrong with that. The problem we're talking about here is when a customer goes in to transfer money from their account to another institution, or maybe to an investment or something like that. At the counter, they're having all sorts of ideas put in their head, because I've come across many instances of it recently, and it is ideas in their head by people who don't know what they're talking about. There's a level of protecting somebody to make sure they're not scammed, and there is a level to which you're interfering with the way they do business. And I've even come across a case recently where the person in the bank said they won't do the transfer electronic. They won't carry it out on the instructions of the customer. Now that is completely out of all bounds. You are the customer. You're entitled to make the decisions that you make, and you're entitled to make sure that the bank adhere to your instructions. That's what this is about. And they become interfering to an extent that I have to say there's a bit of a motive sometimes behind this, because they don't like to see the funds leaving the bank, to put doubts in people's heads. And what's the motive? To sell them one of their own products down the road, because you have funds left there and they're going to try and get that type of business out of you. So all I would just say to anybody who's in a situation where they go into a bank and they find themselves pressurized like this, well, then you just tell the individuals you're dealing with, do the transfer. It's my money, I'll do what I want with it, and don't allow yourself to be sidetracked when it's unnecessary, that you should be subjected to this type of pressure.
Another issue, could the ECB raise interest rates as inflation hits 3.20%?
This is worrying, I mean, we've seen interest rates, or inflation rise in the last few days to 3.2%. The ECB's target is 2%. And we could see, and I think we're more than likely going to see, maybe a 0.25% rise fairly soon. Whether we see any increases after that will depend on how inflation goes, and obviously that's influenced by a number of things, including the price of oil. Nobody would have forecast at the end of last year increases in interest rates. We would have been looking at decreases. But this whole international situation has kind of rattled that. Now, I would say that is hopefully, and I think it would be a temporary situation, that in 5-6 months' time we could be looking at a different scenario altogether. Increasing interest rates is not something the ECB want to do, because lower interest rates stimulates economic activity, and that's what they want to achieve. So I would just say it's not going to be good news for people with mortgages and that, but at the end of the day, hopefully it's going to be quite temporary, and maybe in 6 months' time we could be looking at a brighter outlook.
Another question into us. I get an income from an approved retirement fund. I'm constantly overtaxed. What should I do?
Okay, what's happening here is that this person is an ARF or an improved retirement fund, and they're getting an annual income which they have to 4 or 5% depending on their age. The reason they're probably being overtaxed is they haven't contacted the revenue to send the correct tax cert to the institution involved. So, for example, they would be dealing with a life company who are sending out a check every year, and the life company are deducting tax. That's the normal process. They are only deducting tax based on the information revenue send them. They're not making the decision as to what level of tax you should pay. So if you're being overtaxed, there's two things you need to do. One, you need to get onto the revenue to correct that situation. And secondly, you can put in a claim to claim back the overtaxed amount over maybe last year or 2 years of whatever length of time is going on.
Another question. I'm about to retire from a job I've been in for 20 years. I have been given a number of options with my pension, and I'm very confused as to what I should do.
Again, this is quite a common situation. People, when they retire, they're given a number of options which can amount to drawing down their tax-free lump sum, or deferring that and getting an annuity. There's all sorts of options in there, and it's really important that you make the right decision. This is a once-off situation you're in. It's never going to happen again, and it will affect your finances moving forward into retirement, and it is absolutely crucial that you do make the right decision. And in order to do that, I would always say to people, get advice. Just, if you feel very comfortable making it yourself and understand the decisions you're making, that's fine. But don't just tick a box on these forms and send it off, because you could be making the wrong decision. Get advice is really important, and it's a crucial time of your life.
I want to bring up AI with you, because a new report reveals that artificial intelligence has been named as the most influential office innovation by global CEOs, with 36% of the bosses ranking it in the top spot. The report was commissioned by the International Workplace Group, marking the 300th anniversary of the modern office. Laptops and tablets at 35%, video calling and conferencing 31%, Wi-Fi 29%, and hybrid working 26% complete the top 5 most influential office innovations. So, most relatively new technology has been named the most influential. It could have a big bearing on finances going forward, Dave.
Oh, it will. I mean, every aspect of economic life and social life and daily life is now being affected by AI and will be affected by AI in going into the future. Like, one area you could see where AI could have an enormous impact, and I think probably already is having, is in the healthcare sector, in relation to finding cures for serious issues like cancer and that. So AI is here to stay. It's how it's used and how we use it is the key point, there is a lot of concern about employment being affected in certain industries, loss of jobs because of AI, and that is a real concern. But I think employers and industries generally need to kind of be sensible and balance up. You can never replace the human contact, the human person, with AI. You can improve their performance and it maybe improve your company, but you can't really replace them. If you try to go down that route, it's going to cause you all sorts of problems as an employer or as an industry. So, I mean, I saw some incredible figures the other day or yesterday from Google, and Anthropic is a big AI company. They're raising enormous monies for investment in AI this year. In this year alone, in 1 year, a group of these companies are going to invest $1 trillion, not billion, dollars in AI, which is absolutely staggering. And that's on top of huge investments into the hundreds of billions over the last number of years. So I suppose they see it as being I suppose, a gateway and a doorway to a future that none of us can really foresee at the moment. In the sense, you go back 20 years, did any of us foresee the impact the internet was going, our mobile phones would have had on our lives? So AI is now the next big thing, and hopefully it'll be used for positive reasons.
Dave McCarthy, Associates in Woodkey, thanks for joining us on Galway Talks this morning. I want to move on though, because award-winning